Hello, welcome back to Core Finance. I'm Matt Brown. I'm in the hot seat today as the Moose Batsford is in Brussels telling the European Parliament a thing or two, giving him a piece of their mind. So anyway, in the meantime, enough of that. Tim Harrison, Head of Wealth Management at Linear Investments, thank you for stepping in today. Let's have a look at the headlines. US markets touch record highs, lifting European markets, but the UK awaits the budget. American markets going from strength to strength. Forget the tax reforms. They don't care. Onwards and upwards.
It's relentless. The past few days, week, 10 days or so, you've started to see the markets want to pull back. It's been obvious in the price action on UK and US stocks. However, they just keep on going up and up and up. Obviously, the rhetoric over the past couple of weeks has been the tax reform in the US. But again, it's kind of like, right, that story's old now. You know, what's next? But you are seeing companies progressing, and so there is an element of euphoria within individual and the micro economy. But then you look at the potentially, with the way things are, the US stepping into recession. So it's a case of the markets are all-time highs, but the general economy maybe not as strong as everyone suggests. So it's an interesting dynamic. Obviously, that has helped the FTSE and the European markets sort of maintain their forward momentum. We did see, as I say, a pretty sensible pullback over the past couple of weeks, but there seems to be buyers' appetite ahead of the budget today.
And in previous bull markets, it feels like everyone kind of is popping the bubbly, going around slapping each other on the back, deals are being done, there's a euphoria in the city. And this bull market doesn't really feel like that. Is that now because that age has now gone, that's in the distant past, and now it's just the slow grind of passive fund managers getting involved? Or what's the background? Why do you think that's going on?
Well, it's an interesting point because many have suggested this bull market should have come to an end a long time ago. So nobody wants to pop the cork because they don't know when to actually pop it. As I say, the Dow 5 minutes ago was at 18,000. I point this out regularly to my investors. We're now at 23, pushing towards 24,000. You know, it's a case of this bull market is a grind. It is relentless. At some point, one would suggest, going on historics, we will see a pullback, but there just seems to be continued buying momentum. So for those that are on profit-related splits who are long the markets, you know, it's going to be a good time. For those, however, who are heavily short the markets, not a Christmas to look forward to, one would suggest.
And speaking of Christmas and presents, the UK budget, anything that the taxpayer could have an early Christmas present from Mr. Hammond?
It's a very, very tough question because obviously a lot of the newspaper hacks have been putting out feelers as to where we may see further help in the property sector, etc., etc. But you've got to look at, for example, the government to maintain their spending and maintaining their targets. You've got to look at where they're getting the cash in from. Many years ago, when I was a nipper, the money was coming from oil and gas receipts, tax receipts there. Nowadays, it's about tuppence halfpenny. So they're looking at the property market to tax the higher end of the property market for the property magnates to try and slow them down and push the money towards the lower end of the bracket, the help to buyers, etc. So the key focus will be, I would suggest, on the housing market. But again, you're looking at one cog within the mechanism. So it's a very tough gig, especially going into the continuing Brexit negotiations. We don't want to tighten things too aggressively if we do see the general economy slow down.
Okay, moving on, looking at a specific stock, one of two that we have today. MediClinic, expertise you can trust. Expertise at the board level when it comes to M&A activity?
Well, obviously they launched the offer for Spire Healthcare a couple of weeks ago, and it was a kind of, they already own a significant stake in the company, so it's just a case of, you know, why not, so to speak. That being said, the market did not react pleasantly to MediClinic and suggested that they need to get their ship in order before going on the acquisition trail and picking up the remainder of the stock that they don't already own. Subsequently, you've seen both stock prices react the past few days as the deal has fallen out of bed. But again, private healthcare with the NHS, etc., you know, it is an opportunity. But with these sorts of companies, have the good days been and gone, or are we at the edge of another bull run, if you like, in the private healthcare space? some may be revealed later on with the budget.
Moving on, looking at SIG, what do they do? Where do they operate? Why have you picked this particular
So
stock?
this is insulation and such like building materials, so to speak, for large scale. Now, obviously, there has been the disaster with Grenfell,
Yes.
for example, and these guys, I believe, are one of the only companies out there that make the relevant insulation for and cladding, etc., for these sorts of buildings. Now, again, you've got to look at, when you're looking at the property market and the commercial property, residential market, continuing to drive higher with the amount of money that the government is pumping in to support it, rather than looking at the home builders and the construction companies, looking beneath the lid, if you like. And these sorts of companies, the suppliers too, are generally the ones that may outperform because they've not got one client, one customer. They are across the board. Their numbers earlier in the week were very, very solid, and they reacted nicely yesterday. And one would suggest if we do see continued momentum in the property market, these sorts of companies could do well.
Good stuff, one to look out for. Looking at the pound, obviously ahead of the budget, more with the budget as well, it's going to be how they expect, or the government expects, the UK to perform as well. And I think probably that will be the main focus for pound traders. Pound's obviously done quite well of late, so look out for that when we see the budget release. Moving on, looking at broker upgrade, downgrade, JP Morgan, overweight from neutral on Reckitt Benckiser. Defensive move?
It's a company that has obviously had a number of, in terms of share price movements over the last month or two, has had a few ups and probably a few more downs. That being said, it is a conglomerate, it is a very diverse business, and one would suggest if you are a more cautious investor, these are the sorts of companies you want to look at. Obviously the likes of Unilevers, your Reckitt Benckiser's, etc. You stick them in your portfolio and hopefully they won't go too far too fast, either upwards or downwards. But again, it's interesting to see JP Morgan actually being bullish for once. You know, they've caused a bit of pain for a couple of companies of late. Okay,
and core number today, 36 million. I've picked this out. This is basically online, the equivalent of eBay in China. 2 747 jets have been sold for a combined 36 million auction price. Very interesting. I believe it's owned by Alibaba, very interesting company. And we were talking off air about Chinese companies and actually some that aren't on the radar. Just fill us in on that.
So again, it's going back to the tech boom over there. You've got the likes of Alibaba, you've got the likes of Baidu, which is the Chinese version of Google, and then you've got Tencent, which is a name that many may not be familiar with, but it's huge. As of yesterday, I believe it became one of the largest companies on the globe by market cap. Overtook Facebook, over $500 billion, yet many have not heard of it. They are the Chinese version, I suggest, or one of their key parts is WeChat, which is the same, one would argue, as WhatsApp. Obviously, WhatsApp, Facebook, etc. are banned in China. But again, there is obviously in China a domestic desire to be like the rest of the world, and these sorts of companies are doing very well. Alibaba, huge. Obviously, Tencent is becoming that way.
And these companies now could rival the US tech giants.
Well, again, yes, but what you've got to look at is their propensity to go outside of their own four walls, if you like, and look at other companies as acquisition targets. Because what you are buying there is the intelligence, and you put it into the Chinese way of life and their work ethic and the desire to be the best. It could make for a very interesting few years over there.
And finally, looking at the calendar, economic calendar, as we said, the autumn budget statement, initial and continuing job claims for the week, durable goods orders, FOMC minutes. Any final notes?
Top and bottom on there. Obviously the FOMC to see what their guidance and what the chatter is with regards to potential rate rises. Obviously Janet Yellen coming to the end of her tenure, but more importantly for investors over here, what Mr. Hammond has to say come 12:30. And more importantly than that, the Ashes starts through the night, so that's much more exciting.
What is your prediction on the Ashes?
Watch this space. I like the fact that the Aussies are really starting to puff their chest out, but I think England could be a pleasant surprise. I'd say 2-1 to England.
Super. Well, let's hope we don't see another 5-0 whitewash. Tim Harrison of Linear Investments, thank you very much for joining us today.
Thank you.